All right, so let's go deeper into Nvidia right now. What is the options market expecting for the earnings report? Let's bring in the options action crew, Carter Worth and Mike Khouw. Carter, first to you. What did the chart show?
Sure, let's get right to it. First, I just want to look at what the stock has done the past 5 quarters. So we have a table, and Mike will speak to this later, but the implied move is actually sort of muted, about 7 to 8%. But that hasn't happened once in the past 5 quarters. Here on the screen, you can see it's been big up, big down, or unch, and yet this time it's implied something sort of muted. But let's get to the charts. 3 identical charts, and we can draw the lines several different ways. But the first thing to note, of course, this was basically a range-bound stock between 400 and 500 for about 8 months, and then essentially doubled, went from 450 to 950. And so let's look at that consolidation and draw some lines here. So again, this is the question. This kind of formation, more often than not, is resolved to the upside. But I think what's important is a fairly muted up, not one of the big ones. That's my guess. Final chart. I think you can anticipate we stay sort of in this range, and one could say, well, that's still some good eating from here. I don't think the prospective upside move outweighs the risk of what might be something unhappy.
So, Carter, before we go to Mike, that range is what? Because you had 3 lines, 3 parallel lines. Mm-hmm. So is it the lower range that you were talking about? Well,
meaning, and in fact, I didn't characterize the table quite accurately. You'll see that there were no big downs. Either unch, 2 quarters where it was unch, and then big up. We've had not one down in quite some time. That's the risk. And if indeed we're going to have a down, I think it's going to be bigger than the prospects of the potential up move. So that essentially summarized as follows. I think the up move is what's likely, but it's going to be muted, but it doesn't outweigh the risk of what could be your first down move in quite some time.
All right. Carter, thanks. So, Mike, how are you trading this?
Yeah, so as Carter pointed out, the implied move for just the day of earnings is a little over 8%. For all of next week, the options market is implying that Nvidia could move about $90 higher or lower, just over 9%. I think if you're going to play this kind of range-bound thesis and sort of a muted potential up move is the one that you are hoping is going to be most profitable, one of the things you could, of course, do is try to sell some of the elevated premium by, for example, selling next week's 840 1020 strangle. So you're selling the downside put and selling the upside call. Of course, selling those options naked like that carries unlimited risk. So the way you hedge that is by buying a longer dated strangle of those exact same strikes. I was looking out to September, which captures, of course, not only next week's earnings, but the one that's subsequent to it. That way you get to capture some of that decay that could happen in the near dated stuff while still having some longer dated options to protect you. And the peak profits would be if you get that move to the upside.